All right, time for our Dollar Dialogue segment. And this week we're going to talk some more about that shock new savings account product from ING that hit the market this week, the Savings Booster, which offers a market-leading rate of up to 6% per annum to new ING customers for the first 4 months and an ongoing rate of up to 5.4%, conditional upon the balance growing at least $100, excluding interest each month. Joining us to discuss is ING Australia's Head of Retail, Jennifer Davies. G'day, Jennifer. Welcome to the Savings Tip Jar.
Hi, Dom. Thanks for having me.
Now, before we get into all the details of this new savings product that I'm sure has caused a bit of a stir in the market, let's have your savings tip, Jennifer.
Oh, thanks, Denise. And if you indulge me, I'm going to offer two to your listeners. The first one is to encourage everyone out there to log into your online banking account and check what your savings rate is and what you have to do to earn that interest. Now, my second tip is I'm a big believer in making savings as automatic as possible. So if you're able to, set up that regular transfer after payday, even if it's a small amount, and that can help savings feel a little bit more like a habit rather than something that you've got to remember each month.
Yeah, absolutely. Great tips, Jennifer. Sorry. I had noticed actually in the ING app that because I have been a customer in the past, I probably should disclose that. And I did notice that it does have those little sort of tick marks next to the conditions about whether you are on track to earn the bonus interest for the month. So I wonder if many other banks offer that. So yeah, certainly logging in and making sure that you are meeting those conditions will help you ensure that you're getting the bonus rate, and yeah, certainly automating your savings. So it's just set and forget, and you're not always having to think about savings. That's a good one that a few guests have said in the past. But yeah, getting into this major product change from you guys, I think you've called it the biggest change to your savings account offering in 18 years. So I wonder, 18 years is quite a long time. So why the sudden change now?
Well, first of all, Dom, thank you for your business. It's great to hear you're an ING customer. Look, what I'll say is that customers' expectations and savings habits have been evolving over the last few years. And what we've heard is that people want products that they're easy and they fit more naturally with what they're doing in their lives and how they manage their money. And so we designed Savings Booster in response to that feedback. It's less about reacting to a single moment and more about recognizing that people save differently. So some customers, they just want that set and forget savings product, while others are comfortable taking a more active approach and being rewarded with a higher interest rate. So we thought it was time, in almost 2 decades, for us to broaden our savings range and give customers another option.
Yes, I did think it was sort of a bit of a middle path between your accelerator, which is your no conditions, and your maximizer that has a few boxes to tick there. So it did make me wonder, could you just change one of those? What was the ethos behind the whole new product?
We look very carefully at that. And what we found is different customers, they value different things. So the Savings Accelerator, as I said earlier, that's our set and forget product that appeals to customers who just want ongoing good value without having to meet monthly requirements. And then we've got the Maximizer, which suits customers that do want to play that more active role and be rewarded with a really high bonus rate. And so rather than changing one of those two products, and potentially that would limit choice for customers, we thought it was time to introduce something new. And as you said, the booster sits in between, and it's a simple way to save built on that one straightforward monthly savings habit.
Now, Jennifer, the restriction to new customers only. We were sort of talking a bit about that around the office, trying to work out what does that exactly mean? Because, I think that restriction would be quite disappointing for a lot of the savings account aficionados in Australia who've probably all had an ING account at some point over the last few years, given you guys often have some of the highest rates in the market. So, we just wanted to clarify exactly what is a new customer.
Yeah, so to be eligible to receive our 6% introductory rate on the Savings Booster, you need to be a new to Savings at ING customer. So if you're an ING customer today and you only have a transaction account or a mortgage or a credit card, for example, you'll still qualify for that 4 months period of the 6% welcome rate. Now, if you are an existing ING savings customer, provided you grow your balance by $100 each month, you'll receive our boost rate, which is currently 5.4%. And the really nice thing about the Savings Booster product is if you happen to have one of those months where you don't because of bill shock or, that holiday you've just been on, you'll still receive a 2.25% interest rate as a base. And we think that's really exciting for customers. It's something different in the market.
Yeah, that isn't too bad compared to some base rates, that's for sure. Now, I do look a lot at savings accounts products, particularly sort of popular ones, and I did notice, and I thought it's something I'll check with you, just that $1,000 monthly deposit requirement for the old savings maximizer. I noticed that it could be to an ING loan or even a personal loan. Is that a new thing? Was that there before?
So, Denise, we have evolved our the eligibility criteria for the Savings Maximizer over time, and you are right. Exactly, it just needs to be $1,000 transfer to a set of ING products. You pointed out a mortgage, a personal loan. There's a range of products listed on our website in the T's and C's. So there's options there for customers. And what we have done, you might have picked up on this, Denise, being a savings aficionado, we've recently taken the opportunity to update the wording about our products to make it clearer for customers on how they're able to meet the eligibility requirements.
Yes, it seems like you've perhaps extended that in a way, encompassed a few more options, put it that way.
Well, what we want to do is help more Aussies saving. That's a really important goal for us at ING, and it really goes back to our legacy in the market. And here we are, nearly 2 decades again, helping more Aussies save.
Yeah, that was well spotted by you, Denise. I would have missed that one, but that's why we have you as our top journo here at Savings.com.au. Now, Jennifer, I also want to ask, just sort of generally, I wonder if this change in offering from ING has sort of come about amid maybe depositors' preferences changing in recent years. Like, is that something you guys have noticed? Are people sort of less focused on rate and maybe are prioritizing things like having fewer conditions for earning the top rate, or cool new sort of budgeting features within an app? Is that sort of been a motivation?
Oh, look, Dom, I don't think it's an either or. Interest rates obviously remain incredibly important given the times that we're living in and cost of living challenges facing customers. But people are also looking for simplicity and convenience. And so we've heard from customers that they want to have to worry about remembering lots of requirements. And that's one of the insights that helped shape the Savings Booster. Customers told us they wanted fewer things to remember. They wanted a product that just fitted in with their natural savings habit. And so that's why we've designed the booster around that savings habit of growing your balance by $100 a month. And then, look, there are still customers who are prepared to be more active and be rewarded with earning an even higher bonus rate. And for us, that's why having options for savings is really important.
Yeah, it's interesting, isn't it, with the success of Macquarie's no string savings, which tends to grow and grow still, and we saw even AMP bringing in its digital only Go Save, and that seemed to be very popular in just its first year of being launched. So, yeah, have you noticed, apart from people not wanting to think about their savings, apart from the fact that they don't need to do anything, is there anything else you've noticed with customers? Anything else that you can pick from your data?
Yeah, look, we put out a piece of research recently. We called it our sense of us, and it's really important for us to understand how customers are thinking, what they're feeling, and not just about banking, but about life in general. And a couple of interesting factoids for you. In fact, 45% of Aussies say that saving money is their number one financial goal this year, and that's increased from a couple of years ago when we last ran the research. And I think, you spoke to the range of offers that are out there in the market, and we love that. It gives customers more choice, healthy competition, and ultimately it's supporting more Aussies to save. Another thing that you might be interested in is around habits of using, different banks. And we have, we've noticed that 62% of customers are using multiple banking apps for different reasons. So some customers are separating their spending and saving, or they're using different products based on their goals. And, that's becoming more normal, and it's, we encourage people to be really intentional about how they're managing their money, how they're saving, thinking really carefully about what products best meet their needs.
Yeah, well, it's certainly a pretty tough environment to save in at the moment, but hopefully this new product from you guys makes it just that little bit easier. It certainly can't hurt. 6% per annum for up to 4 months. And I guess we should probably thank you as well. There's been a lot of interest in this new product, and it's it's driven a lot of traffic via the article we wrote about it to Savings.com.au. So cheers for that, Jen. But most of all, thanks so much for fronting up on the Savings Tip Jar podcast and telling us all about this new product. Appreciate your insights.
Thank you for the opportunity.
Great to have you, Jen.
Happy saving. Savings is
Happy
in.
savings.